The Canadian real estate landscape continues to evolve in response to significant economic and policy shifts. For investors navigating this complex terrain, understanding these currents is essential for making informed decisions. Here's our analysis of the key factors currently influencing real estate investment opportunities across Canada. Interest rate environment, the turning tide. After a prolonged period of elevated interest rates to combat inflation, the Bank of Canada has begun its easing cycle. With 2 rate cuts already implemented in Q4 2024 and more expected throughout 2025, investors are seeing a gradual improvement in financing conditions. This shift is particularly significant for cash flow properties. Lower mortgage rates are improving the spread between rental income and carrying costs. Development projects. Financing for new builds is becoming more viable as borrowing costs decrease. Value-add strategies. The cost of renovation financing is declining, making improvement projects more attractive. However, this doesn't mean a return to the ultra-low rates of 2020 to 21. The Bank of Canada remains cautious, and investors should prepare for a new normal of moderate rates rather than a rock-bottom environment in the past. Housing supply initiatives, government intervention. The federal government's ambitious Housing Accelerator Fund and complementary provincial programs are beginning to show results. Municipalities across Canada have been updating zoning laws to encourage density, particularly around transit corridors. For investors, this means emerging opportunities in previously restricted zones. Many single-family neighborhoods are now open to duplex and triplex conversions. Premium on transit-adjacent properties. Sites near major public transportation hubs are seeing accelerated appreciation as density bonuses take effect. Increased competition from institutional capital. Major players are moving into markets formerly dominated by individual investors. These changes represent both opportunity and challenge. Investors who can navigate the new regulatory landscape will find significant potential for growth in areas previously limited by restrictive zoning. Immigration patterns, sustained demand. Canada's immigration targets remain historically high, with projections of over 400,000 new permanent residents annually. This population growth continues to drive housing demand, particularly in secondary cities. As affordability challenges persist in Toronto and Vancouver, cities like Calgary, Halifax, and Ottawa are seeing increased migration and investment activity. Purpose-built rental housing, with many newcomers renting before buying, well-located rental properties remain in high demand. Student housing. The international student market continues to grow, creating opportunities near educational institutions. Smart investors are following these demographic shifts, recognizing that population growth remains a fundamental driver of real estate appreciation. Climate considerations, the new reality. Recent years have brought increasing awareness of climate-related risks to real estate. From flooding in eastern Canada to wildfire threats in British Columbia, these factors are influencing investment decisions. Forward-thinking investors are conducting enhanced due diligence, examining flood maps, wildfire risk assessments, and other environmental factors before purchasing. Investing in resilience. Energy-efficient renovations and climate adaptations are increasingly seen as necessary investments rather than optional upgrades. Seeking insurance certainty. Properties with lower climate risk profiles often command premium prices due to their insurability. This trend is likely to accelerate, with climate resilience becoming a standard consideration in real estate valuation. Regional spotlights. Markets to watch. Prairie provinces. Alberta and Saskatchewan are experiencing renewed interest, driven by affordability and economic diversification. Calgary in particular has seen strong price appreciation as interprovincial migration reaches multi-decade highs. Atlantic Canada. While the post-pandemic boom has moderated, structural advantages, including affordability and lifestyle benefits, continue to attract both residents and investors from other parts of the country. Quebec. Montreal's rental market remains robust, though the province's unique landlord-tenant regulations require specialized knowledge for successful investment. Strategic considerations for today's investor. Given these trends, investors might consider focus on fundamentals. In a market transitioning from speculation to income, properties that can generate strong cash flow deserve priority. Seek regulatory advantage. Areas where zoning changes create new development potential offer asymmetric upside. Think demographically. Following migration patterns, both international and interprovincial, can reveal emerging opportunities. Plan for the long term. Real estate remains a patient investment, and short-term volatility shouldn't overshadow structural advantages. Adaptation and opportunity. The Canadian real estate market continues to present opportunities for informed investors. While challenges exist, From climate concerns to policy shifts, those who can adapt their strategies to current realities will find pathways to success. At thrivecommunity.ca, we remain committed to providing the insights and analysis you need to navigate these complex waters. Remember that real estate investing is both art and science. Combining data-driven decision-making with on-the-ground experience will always be the surest path to sustainable returns.